Yo guys, Clem here, and we are back with another video. And in today's video, we are be going over liquidity, right? So a lot of people get confused about liquidity. They don't really understand liquidity, or they overcomplicate liquidity. Okay, when in a matter of fact, liquidity is a very simple concept. Um, the market moves from liquidity point to liquidity point. So if you understand liquidity, obviously, and you have a good understanding of market structure, the two kind of go hand in hand. Obviously, liquidity, in my opinion, is secondary. Market structure should be your main focus. But after you've got market structure dialed down, incorporating liquidity into your trading is a great addition. So I just want to run over this bit of price action here. Now, in the market, okay, you need to understand, first of all, what is liquidity? Liquidity is resting orders. Let me just put some text on the screen. So liquidity is, that's a bit big. Liquidity is resting orders. So what do I mean by that? So resting orders are buy stops, sell stops, stop losses, and market orders. That being buy limit orders slash sell limit orders as well. Okay, these are resting orders in the market, and on an asset like pound dollar, GBP USD, it's one of the major currency pairs, which should mean that theoretically you can get in and out of a trade wherever you are in the market because liquidity is deep. Okay, it's one of the major Forex currency pairs. So the liquidity for this pair should be very deep. Any price you so wish to get in and out of, you can do so. Because ultimately, for every buy, right, you need somebody to sell you that trade. Okay, and vice versa. For every sell, you need somebody to buy that trade off you. So with a more liquid asset, it means that there's potentially a buyer and seller at every single price point in the market. So you can get in and out of your position wherever you want, whenever you want. Whereas on a pair like the Norwegian krone against the Mexican peso, this is considered, obviously an exotic pair. It's not very highly traded, so it would be considered a less liquid asset, meaning it would be more difficult for you to get in and out of a trade at any single position you so wish. Depending on obviously your position size. If you've got a very, very small position size, it shouldn't be a problem. But if you're trading, a large position size, it would make it significantly more difficult for you to get out at your desired area, and you would more than likely experience slippage. Rewatch the video, understand that fully, if you don't understand, before moving on obviously to this next section. Now, I also just wanted to let you guys know, in the description there's a link to my free Discord community. I literally set it up yesterday. I'm going to be running some Zoom calls, some free Zoom calls, with a couple of guys, going over some charts and teaching them some stuff, and we're going to do some live trading Zooms as well. So definitely get in on that. Resting orders are literally above every single high and every single low in the market. So why are there resting orders here? Well, one, breakout traders, people setting buy stops at this level to buy when price breaks out. Okay. And also people that are selling at this level. Okay. They place their stop losses, just above this high, meaning that obviously there is resting orders there that the market is going to be magnetized towards in order to fill those orders, wherever they can stay. One of the easiest ways to identify liquidity in the market is if we are bullish, like we are on this push here, is the opposing swing high or swing low. So in this sense, we are bullish, right? So the market comes up, it creates a swing high, we pull down, and that is a weak swing high because we are bullish. Okay, so more than likely we are going to trade through that, filling these orders, liquidating these positions, because any positions here will either be filled or liquidated. So if they're selling, that sell position will be liquidated when their stop loss is filled, hence the name liquidity. Obviously, equal lows and equal highs. Okay, so the market moves from liquidity point to liquidity point. So as we can see here, yes, I know this is very late in the day, like 10 p.m. at night. But as soon as the Asian session opens, okay, what do we have here? We have a massive set of equal highs here. So what does that mean? This is a massive liquidity pool here, and also at this low here, we have a massive set of equal lows too, another liquidity pool. Now we are bullish at this moment in time, okay? So what's the more probable move? More than likely, we're going to take the high before we take the low because we are bullish, right? So notice as soon as Asia opens, we absolutely smash through this liquidity pool, right? Liquidating those positions. And after that, the market decides it wants to go bearish, right? So we break this structural low here. And in the process doing so, we liquidate these positions slash fill these positions because obviously, it's a massive set of equal lows. And like I said, the market moves from liquidity point to liquidity point. So we have this liquidity point here taken. Where's the next liquidity point? Here. Okay. So we go up and we fill those liquidity. And now we need to find and seek more orders. So, ultimately we come down and you see, we give a little pop, right? We fill these orders here and the market reacts to it. But ultimately, the bears took control at that moment in time and we broke structure bearish. So I actually took a trade from here late in the New York session before I ended the week. And I'm still holding actually. I'm in at 932, just around this level. Now, why did I take this trade? So, of course, right, we went bearish here. We had a break of market structure on the 15-minute time frame, and we generated this minor high, I will call it. I wouldn't denote this as swing structure. It's more just like minor structure. But what is this? This is a form of liquidity, right? Yes, we are bearish at this point. However, this is not a significant high or low in the market, right? It's just a little pullback. So this is almost like early sellers. Okay, this is people who sold up here, but they're a little bit early. So what's going to happen? The market's more than likely going to pull back and liquidate some positions before carrying on with the trend in that direction. So we see that here. Okay, the early sellers get liquidated. Price obviously trades up to into this POI here. Notice that this is a very clean push. Okay, so what did I say here with regards to we need to take some form of liquidity? So what's going to happen is, because this is such a clean push, when we start coming back up super fast, more than likely this high is going to be liquidated because we do not have a significant amount of resting orders, a liquidity point in this leg to take to obviously continue up. So what actually happens is, we liquidate that initial high. It's the first tap obviously into this POI, and then we continue. Say for example we have a downtrend. Okay, so price is putting in lower high, lower low, lower high, and we create a double top here and we put in that lower high. That lower high is successful in doing its job and taking out that swing low. Okay, potentially some traders might say, okay, right, well, we've got a massive set of double tops here, so I'm going to take a counter trend buy in order to target these double tops. Sometimes that might work, 2 out of 10, 3 out of 10, however many times, but ultimately it's not a high probability trade. Yes, we have liquidity here, but the overlying situation is that the market is bearish, and obviously market structure is dominant or has dominance over liquidity. This is what I mean when I say structure is number one and liquidity is number two. This market structure is bearish, okay? So the probability of price running this at this moment in time is quite low. Yes, of course, it could happen, but probability would suggest we would continue with the trend, tap into a level up here and continue. Then potentially, when we get a shift in market structure to bullish, then all of this can become our liquidity pool to target, okay? Because we've had that shift in market structure to bullish, if that makes sense. Now, there is another form of liquidity called in-range liquidity. Now, that is, so let's say here, okay, this is our break-in structure, right? And this is a point of liquidity within our range. Remember how I said that there is liquidity above every single high and low in the market? That also stands for these small little internal highs, okay? Yes, it's not swing structure. So more than likely what we will do is we will pull back up into this previous structural range here. We will take this internal range liquidity and then we will continue on. Most of the time, what you will see, if there's a very clean push, for example, like this, okay, and there's no liquidity in this leg, there's no like visible resting orders, let's say, in this leg. A lot of the time, this high, the previous swing high, can be induced and can be used as liquidity. I hope that you will understand this trade that I took here. Now, there's another scenario, right, which happened here, and I combine my structure and liquidity. So I like my market structure to run liquidity like this. Okay, so that would be my break in structure. That would be my run on liquidity. This would be my break in structure, and that would be my run on liquidity. So I'd have swing high, swing high. Okay, I've just noticed that it makes it a lot more probable when you combine market structure with runs on liquidity. So we can see here, right, on GBP USD, we run this low here, and then we put in that high. So this would I would denote as my swing low, and this would be that in range liquidity, what I just spoke about there. Okay. So notice how when we break this structure here, okay, and we start to put in this corrective pullback, there's no inducement, there's no liquidity in this leg here, okay? It's a very clean push. So when price ultimately respects off this level and puts in a new high, a lot of people would deem this as a break in structure, okay? And they'd say, okay, this is my new swing low. Well, I wouldn't do that because there's no run on liquidity in this leg, okay? If there was something like this, okay, and we take out this level here, valid, that validates that for me. Or even something like, say this pulled back here, we then took out that high and then we started to pull back. Okay, I've seen buyers being taken out of the market. I've seen somebody liquidated in some form or another, right, which then validates the strength of that swing high or swing low for me. So you see, very clean push. So ultimately what happens is price reacted off it, but it's almost trapping traders because we then pull back and immediately we take that low. Okay. Yes, we give another little reaction off it, but ultimately what happens, price comes below that in range liquidity here. As you can see, we end up tapping into some level here and then we pop. Okay. Does that make sense? I hope that does make sense. That's one of my little market structure secrets. Um, and then obviously, we took out this high, so then this would be my new structural low down here. Okay, right, look here, we take out buyers in the market, so we run liquidity here and we continue up. So then we also did the same here, which is how I denoted this as my break-in structure. Okay, because we run this level here. Okay, we just wicked this high via like one tick. So for me, it validates it, one tick, two ticks, 10 pips, a run's a run. And then we pull back in. So we take this high, we pull back in, we run these previous buyers, we take somebody out of the market and we continue on up. Then ultimately this level fails. So this was definitely valid for a buy for me, but I was actually in the toilet, so I missed it. And we went bearish. I would have definitely taken a loss there had I been at the charts, but that's by the by, it is what it is. And yeah, that's basically it. And then that brings me on to obviously how I took this trade here. Now, I hope all of that does make sense. Be sure to hit up my Discord. I'll leave a link in the description, so check that out and let me know in the comments if there's anything you want me to go over more in depth, etc., etc., etc. Peace.